Hello YouTube, it's Jerry D from Tennessee. I'm back to talk about some stocks. I had a question from a subscriber, Amir Sultani. Forgive me if I mess your name up. I'm terrible with names, but here's the question that Amir has. I have about 5% of my portfolio in uranium, Dogecoin. Any advice on any other stock that I can grow my 300K capital to $1 million? So here's the thing. I'm going to shoot straight to the point. You can find, like my last video I was talking about, just a handful of dividend stocks, and they give a decent 7-8% return dividend yield. But when you start getting into the real high yield dividend stocks, these stocks can be very volatile. Let me tell you a story about, I was in a stock. PER was the stock symbol, period standardage. It was a property management company. So I was invested into this stock, and it was giving me, if I remember right, it was giving me $4 or $5 a share. I mean, it was like unreal. It was like I was in heaven. I was like, man, this thing pays out good. I bought into this stock. I wasn't watching the stock, okay? I just put it in my portfolio. I bought into it, and I thought, okay, I'm good. Well, so what happened, and I don't know if it's because of the short interest in the stock, maybe drove the price down, but the stock price started dropping and dropping. So, I mean, and it wasn't a very expensive stock when I bought into it. Maybe $10 to $15 a share, something like that. It wasn't a high price stock. It wasn't real cheap neither. It wasn't a penny stock. It was a NASDAQ stock. So the stock price started going down. And I got an alert from E-Trade saying I need to check this stock. I mean, I appreciate them doing it. I didn't have an alert on the stock or anything. I just got a message from E-Trade. Somebody on E-Trade had looked at my portfolio and saw, maybe they were contacting everybody that was in the stock. Because here's what it is. The higher yield dividend stocks are very volatile. Now, given that, they can go up and they can also go down. And this stock, it was dying. It was going down. It was dropping. So, what ended up happening, I got looking at the stock, and the price of the stock had dropped drastically, so I lost money there. And I probably, in the long run, I was in it long enough where I ended up coming out even. Maybe lost just a little bit of change, but I didn't take a terrible loss. I got out of it, and it was mainly because E-Trade had sent me a notification saying I need to look at my portfolio, and they specifically named that stock. So the stock price for stocks to be on NASDAQ, they have to hold a price above $1 a share. And this stock was dropping drastically, the price, and it kept dropping and dropping and dropping. And I got out of it right as it was getting down to $1 a share. And it got delisted, and the stock ticker, you can't even find it now. The stock symbol was PER, Period Standards, I believe was the name of the company. Like I said, it was a property management company. The company just went poof. The stock disappeared. I mean, the company may still be there, and they're just out of the stock market. I don't know. But here's the thing you don't want to do. If you've got $300,000, that's a pretty good little nest egg you've got there. I don't know how old you are and how long you've been saving to get that much money, but you don't want to mess up and get into the wrong stocks, and that 300K could drop to 150K in just a matter of months. You have to really, you need to follow what I say. You to trade scared, trade informed, and you really don't want to invest anything that you don't care to lose. But I would probably mind losing $300,000. That would hurt. So my advice, and I'm not trying to hurt you, I'm trying to help you. I don't want to see you lose money. That's why I told you a story about Per. Because I did lose, I'm pretty sure I probably lost some money, but I didn't have a real big investment in that company. But I liked the payout on it. I don't want you to get in that kind of situation with the stocks. The high yields, they can be very volatile. So it means you can take a loss pretty quick unless if you set in it, they may come back up. If it goes down, I've said it once, said it again. Stocks go up and down every day. You can't get emotional, especially if it's dividends. You really have to. You gotta put your emotions aside when you're doing dividend stocks. So you want to put that kind of money into some safe companies, okay? Some stable. You want to find you some stable companies that you don't have to worry about taking a loss like I did on PER. I was searching when I found PER. I was searching for high yield, and I believe it was a monthly dividend stock. I just couldn't believe they were paying what they were paying out. It was crazy. But if you go do a search now, you'll find a foreign beverage company. I think it may be a French alcoholic company that sells alcohol. But you won't find the Per I was in was an American land management company. I can't remember if it was like oil and gas. Probably oil and gas, something like that. They were they just managed, got the contracts for drilling for oil or natural gas, and paid rent to the landowner, and the based off of what they gained off of selling the rights to the gas and oil, and the rent from, after taking out the rent for the landowner for use of their land, then they paid out a dividend. But you can find, so your goal is to hit $1 million, and that's a realistic goal. I've got in my Fidelity account, I'm up to $500,000 right now on my stuff, and I'm more vested into the funds that are specific, that Fidelity offers some high yield funds, so fund groups. So if you're wanting to invest in yourself, this is my suggestion. Let me change the scene here. Will this work? I think this will work. This works pretty decent. All right, so I use E-Trade for a lot of my stuff. Like I said, I'm in Fidelity too. I have another account with them, but I also have American Century. So you can go out. I think the safest way to invest your $300,000, if you want to find some decent stocks, your brokerage should have some screeners, some stock screener stuff that you could go to, and they've already done the research for you. Okay? So like here on Fidelity, I went and I run a report on fundamental strategies, high dividend payers. Okay? Abby was the top one that could come up, and I don't know if you can sort this by. No, you won't be able to sort this. You can view all 89. Let's view all 89. Now, 52 week. How can I sort this? There's probably, oh, it's in alphabetical order is probably why. Well, I don't know. It doesn't necessarily look like it is in alphabetical order. Maybe it's sorted by price. Price doesn't seem to be a factor either. I'm not really sure how they sorted this. Anyway, this is the list. So this come up with 89 specific stocks. The E-Trade recommends that's high yield dividend stocks. Okay, what you want to get into, I've been in A&T. I'm not in AT&T right now, but AT&T is a good, strong stock. You can run a report like this off. This is what I recommend. Now, this is my recommendation. You can do whatever you want to. But you can run a report off of this. And what this did is ran the stock screener, and it was preset criteria in the stock screener. And it looks like you can go look, modify the search. We may look at that here in a bit. But you could do something like that and pick a handful. I would pick more than one. I would diversify. So if one goes down, maybe another one will go up and they'll offset each other. But I just look at a list like this, pick the stocks that you like, that you feel comfortable with. One of the rules of thumb, if you're going to invest in stocks, a lot of people that I've read several books on stock investing, and most of the books will tell you if you want to do well in stocks, buy in the companies you know that you're comfortable with. Products that you use every day is a good way to pick your stocks. Products that's been around for years, the stable company that you know it's going to be around for years to come, probably going to be around when you're gone, that kind of stuff. Because you want to build a legacy for your kids, your grandkids. That seems to be the mindset for a lot of investors. You want to leave a legacy. You want to leave something to the people you leave behind when you pass away. So I want to give you some of my picks. Okay, if I'm just going to give you a handful of stocks, and they're known companies. You're going to know these companies, but I would suggest go to your broker, and go run one of these reports if you want to look and check some of this stuff out. Like I said, AT&T is a stable, been around forever company. Abbey is a pharmaceutical company. I expect they're going to be around. You're going to find, if you run a report of stuff like this, you're going to find what the brokerage feels is going to be a stock that's going to be around. It's not going to be quite as volatile. You can run another report and you can get some really high yield. But again, the price of the stock could drop like it did for me for PER, and I don't want to see anybody lose any money. You want to do this safely. You don't want to lose the $300K you've got. You want to grow it. So my point is be cautious in what you put your money into and be safe. This is one way to get. I just went under ideas, and I picked. There was a drop down. You go aggressive small cap, and let's upgrade coverage, initiated dividend declaration. High dividend payers seems to look like the best pick off of this list if you were looking for growth stocks to grow your dividends. So grow your money off of dividends is what I'm trying to say. So, okay, let's move on. This is one way that you can get a list, and I would look at this companies. I would go click and look at what the companies are, what they do. Look at their chart. Back off the chart 4 or 5 years. See how they've been growing for 4 or 5 years. Look at the company seriously, okay, and see. Get a feel that you trust the company's going to be around for a while. They're not going to be bankrupt in a year or two. This pandemic's hurt a lot of companies, and I would rather be safe with that kind of money. Like I said, if you jump in the wrong stocks, that $300K can quickly drop to $150K or $100,000. It could if the stock prices start going down. Now again, they can go down some, and if it's a strong company, if it's a company that's a known company and they've got strong fundamentals, strong financials, the price is going to go back up because the price will fluctuate. It's going to go up and down a little bit. It's not going to go down real drastically. So, just a word of caution. Just be careful when you do it. Okay, when you pull the trigger, be careful. Fully do your research on the stocks you're looking at, and feel good inside, deep down in your gut, that you know this company is going to be around in the next 10, 20, 30, 40, 50 years. That's what you want. You want something stable to put your money in because, I mean, on the other hand, you can go and do the Tim Sykes thing and you can go play with penny stocks and volatile stocks, but that is very high risk playing with money. You can lose. Tim Sykes has a video out where he lost $500,000 in one trade. So he's on the up and up. He's telling you the truth about what he's doing, and he will tell you this is a risk. So I'm just trying to help you keep you from losing money, because you can seriously lose money in the stock market. It's very risky. There's nothing guaranteed. You're going to be safer to pull up a list like this off your brokerage. Just pull up some high dividend payers, and look at them. Look at the company. Go and look at the company profile. Look at what they've done in the past 5 years. Go out 10 years. You're going to see the big picture when you start backing off and start looking 5, 10 years prior to see what the company's doing. You're going to see a growth like this, the chart going a steady climb up. It's going to be highs and lows, but it's going to be on a steady uphill climb. So let me move on to some picks I've got that I would personally look at. You don't necessarily, I'm not telling you to buy into these stocks, but I am saying if you do need to look at the stocks seriously. So one that I like is Johnson & Johnson. Now, they're going to pay out $1 a share, and they're not cheap. They're $164.75 at the close of today. This is Friday, September 17th, 2021. The ask, and that's what you're going to be paying to get into the stock, is $164.93. I strongly suggest you buy into the ask if you want to help the stock. What causes the price to drop is people putting bids out there and they're trying to drop the bid below the ask, and that's dropping the price of the stock lower. But over time, let's go 5 years. So here's what I'm talking about. See, you go the 5 days, it don't look that good. Okay, but don't let your emotions get to you when you see this. Okay? One day it's looking really choppy. 5 days, a month. Oh man, a month looking bad. 3 months. So 3 months isn't quite as bad. They hit a peak and they just went back down. Year to date, see, that's looking even better. A year, that's looking even better. 5 years. See, when you zoom out, you're seeing the big picture of what the stock's really, really doing. So, I really feel good about J&J. They've been around for years. You probably have their products in your house. Your mom probably used Johnson and Johnson products on you when you were a kid. And they're worldwide. This company sells products all over the world, Johnson and Johnson, okay? So, this is I feel very comfortable about this company. I think it's a very good company that you might want to look into buying into. Now let's move on to another one. 3M Company. You probably have their products in your home, or you've seen their products around. They're paying out a quarterly dividend yield of $1.48 a share as well. So you look at the the closest charts. They're not looking so hot. Yeah, it's not so hot. But here you had a peak. Now you're going down into a valley. Let's go back out a year. 5 years. So if you look at 3M, they are down. And it may be the pandemics that hurt them a little bit. It's stuff. But they have been around for years. 3M is almost like a household name. They've been around forever, as far as I'm concerned. I don't know the exact history of the company, but right now it's on tip ranks. They're a moderate sell, but I think they're going to come back. I think they're trying to come up on the trend up. If you look at this, the end of 2020 and going into 2021, I mean, they're up and down, but it looks like they're on the crawl back up in price. But that's why I say you need to keep an eye if you're going to buy into the dividend stocks. I'd keep an eye on the stocks and see what they're doing. If they start going down, you get a little nervous, like, oh, I'm going to lose too much money in this stock. Well, maybe you should pull it out and go into another stock that you find that's doing real well. Run another report like I just showed you here. Pick another one and go in and move your money into that. That's what your IRA, the fund managers for your IRA accounts are doing. They're moving your money around the different stocks while one's doing well for a while, and then it starts coming down. Well, they'll decide, well, I'm going to forget about this stock for a while. I'm going to roll into this other stock. They seem to be on the trend up, and I'll buy into it and ride it up. And that's what they're doing. That's what their job is to do. So what you're talking about doing, taking $300,000 and try to turn it into $1 million, you're doing exactly what these guys, if you go into Fidelity, American Century, TD Ameritrade, any of these that have 401ks that you can buy into, that's what their fund managers are doing. They're looking at these stocks for you to grow your money. And if you buy into like American Century Ultra, a high yield fund, that's what the fund manager is doing, is looking at these stocks, these high yield dividend stocks, and they are buying into this stuff as a group. They're buying more than one different stock in the fund and group them all into one fund, and they've got a percentage for each stock. And see, that's an option you have. I mean, that's a good chunk of money. You can't just roll it all into an IRA right off the bat, but you can get some pretty high yields off of the IRAs or 403Bs, 401ks, any of these retirement accounts. But you're pretty much doing, if you go this route, you're doing the same thing they're doing. It's pretty much is what you're thinking about doing. So 3M is another one I think is a company. This company's going to be around for years. It's down right now, but I think it's going to make a comeback. Another one, fun. Cedar Fair is another one. So, well, I thought they had a dividend yield. Dividend payable rate. shown represents issue standard, recurring dividend, and any special dividends. PS. I may have to revisit this one. Tip rank says it's a strong buy. Ex-dividend date. I don't know why E-Trade's not showing what the dividend payout is on this. Okay, well I'm not gonna dwell on that, but that is interesting. I may come back to that. Okay, so another one is Ultra Group Incorporated, MO. They pay 90 cents a share. And again, you start looking at them. I mean, the stocks are up and down. You go out 3 months, they're looking a little better. Year to date, they're looking a little better. A year, they're looking a little better. 5 years, they're looking... 5 years looks like they're down past 5 years. So the past year, they're going up. So they're on the upward trend, looks like. So that's a good sign. But I can't go any further than 5 years. But the 1 year, they're on the upward trend. So 7.38%. You know, I'm just saying you need to get into some stocks that you need to feel comfortable the company's not going to be bankrupt in the next 5 years. You want to look at the long term. Will this company be around in the next 10 years? Because if you're talking about putting in the dividend stocks, you're wanting to put this money into something long term and grow it is what you're trying to do. So again, I mean, I give you 3 stocks. I don't know why this one. Let's go to. This is where I looked up Per. The American company disappeared, but there's a French company that has the ticker, a French ticker, PER, and it's nothing. It's not a land management. This is an alcohol company. You can't even find the stock I was in, and it's just been the past couple of years that stock got pulled. That's like ELTZ. Was it ELTZ? I think it was ELTZ. I did another stock video on it. It just disappeared. It was a penny stock, and it got yanked because they hadn't filed. The SEC yanked them. So anyway, so let's go to Yahoo. Let's go to Yahoo. Okay, there we go. Finance. And we were looking at FUN. Let's see if Yahoo says what it pays out. Cedar Fair. Okay, I will take that one off the list then. I don't know why they yanked their dividends unless 5 year, 1 year. It looks like they're on the way back up. They've been about, what's max? Let's see what they've done. See, if you look at the max, I wish E-Trade would do this. So they've been around since 87. And they went up, they did a dip, they were up again, they're doing another dip. I'm expecting this company to go back up. They were at the close of the day, they were up 45 cents, 1.2%. So they're on the trend up. So, unless I need to go relook at my portfolios. They may be yanking dividends. off their last reports. Okay, my bad. Forward dividend and yield not available. I guess they are yanking their dividends. Okay, I would take that off the list. I wouldn't even consider them then. They were pretty decent. I'm not sure why. EX dividend. They are still showing an EX dividend date, so I don't understand that one. All right. Anyway, but that's my point. That chunk of money, I would be very cautious. I would be very cautious about what I threw my stuff in. Oh, I can also do this. Let's go back here. So here's a stock screener. So the one thing I would look at this list that you could get off your brokerage. So if you go to the stock screener will go down earnings and dividends. So you can pick the growth greater than 50. Will this change? No, it's not picking any of these right here. 10 to 15%, 5 to 10, 5. Wonder why. Annual percent. Current fiscal year. Okay, that was because you got to pick one of the bottom ones. So if you want like 50, nothing shows up. Nothing shows up there. Nothing shows up. 5 to 10. 5. Oh, because this got deselected. $42. So this is estimated in the next year. There's 165 with a greater than 50% growth, positive change. That's added more to the picture. So some of them's down. Some of them's down. Well, I don't know. That don't make sense. Positive change, negative change. I'm not sure what that means, but you can see though. My point is, you could go out and you could pick these guys. Revenue annual growth greater than 50. Let's go to the next fiscal year. Click. You're not going to select it, are you? Probably because I'm doing this. Revenue. So payout growth 5 years. If you want to go like greater than 15%, there's 157 stocks that'll be growing dividend growth of greater than 15% in the next 5 years. So you can go dividend yield greater than 8, above industry 3. You can pick by Thomson Reuters picks whether it's a strong buy, sell, underperforms, hold, buys. You can pretty much tip ranks, strong sell, strong buy. You've got 2 the strong buy out of this 157. So, when it filtered it, it's only going to show me the 2 the strong buy. Bam. VHP Group, Vail. So $4 a share right there. I mean, that's getting on up into where Per was. So as you get the higher payouts per share, my point being that it's a bigger risk. I mean, that's the only way to say it. It's a bigger risk. So I'm just saying to be cautious. Okay, so you got several options here. I've give you a few stocks to look at. Not sure what happened with FUN, but maybe they're going to quit paying dividends. You know, pandemic might have really affected them. So anyway, you could go back to this ideas again, and the safest thing is to look at the list that your brokerage will throw out at you when you go and run a report on high dividend payers, because these are going to be the safest. These are going to be the safest stocks that you can get into. Okay, you're going to have less risk in this list of stocks that they just give. These 89 stocks are going to be the less risk with the best return, in their opinion, off of their research. And they pay people to generate these reports, to put these reports out, to give you an idea on how to invest your money. That's why it's under ideas. But I would start with this list. You might want to look at a few of those that I mentioned here in the video. Look at the previous three that I give you. They're fairly strong stocks. I really feel they're strong stocks. So, but again, any of this can be a risk. And again, I will stress that when you go in and you're looking at a higher return dividend stock, it's going to be a volatile company, and you're taking more of a chance. I mean, you might come out, but I would do my research. I would probably be, with that kind of money, you're almost up to $500,000. I'd be a little conservative, and I would go with off a list like this off of your stockbroker, and pick some that you feel comfortable with. Like Abby. Abby's a household name. Abby's been in the news. So AT&T's a household name. I would be picking these stocks. Yeah, when you click on the show the rest of them, it goes straight to the stock screener, and you've already got the search. You could go look at what their search criteria is to pick these stocks. But prior close, 5-day change, 4-week, 52-week change. Let's go. You can sort by 52 weeks. So right there's the top companies off of the past 52 weeks that have increased. So these guys here are strong. These top guys here off of this report now that I've on the 52 weeks change, this one's been up 157% in the past year. So right there tells you that they're on the climb just by looking at this report. And as you scroll down the list, you're hitting the weaker stocks. That's not had such a, but now see, that's not a bad thing, because these has had less of an increase. Actually, I've misstated that. They were probably the stronger stocks. The ones that's had the most increase are going to be the most volatile. Is really the reality of this. So West Midstream Partners, this is probably one of the most, when you sort this way, this is going to be the most volatile stocks. If you're going to be sorting this way, these are the less volatile. I would probably go into maybe the middle of the list. Would be the safest. Get in the middle. You've got around 20-something, 30-something% on the 52-week change, and just pick you a handful of stocks, and then a percentage of each of your money will go into each stock evenly. Would be my suggestion, but that's just just my advice. I'm not a stock advisor. I'm not a financial advisor. I'm just an old man in East Tennessee talking about stocks. I like to talk about stocks. I like talking about money. And that's just my opinion. This is just my opinion. I do encourage you to do your own research. This is a route that you can take. Like I said, this is a route you can take. I'd go off a report like this. This is probably the safer stocks that are listed on the stock exchange that your broker feels are safe investments. I think you're gonna. You have a less of a chance of going wrong if you go off a list like this. Okay. So that's my opinion. I hope I didn't disappoint you. I don't want to see you lose any money, because that is a pretty good chunk of money. $300,000 is a pretty good chunk of money to invest, and I would love to see you succeed. I want to see you meet your goal, and I wish you luck. I hope you have a good weekend. I hope you've had a good, profitable week, and hopefully we'll see you in the next video. But again, do your research and use your best judgment. Feel comfortable about the stocks that you're going to buy into. Don't that kind of money. Don't be playing. Don't be going into some high risk something that could tank 50% the next day and drop your value of your stock down to $150,000. I mean, you've lost half of that. It just bam, in just a little bit. It can happen. It really can happen. I've seen it happen, and I don't want to see it happen to you. And that's why I'm saying this. So I wish you the best of luck. Again, that's my advice. That's the route I would go. I would start off the list off your brokerage and see what they throw out at you. And I would go off that list and pick the ones I feel comfortable with. Look at the stocks that they give you in the report, and I would pick the ones that catch my eye and I feel comfortable in putting my money in. And I would back off, and I'd look at each of those stocks and see what they've done 5 years and see what that chart looks like and see if they're growing over time, because you really want to put your money in the stock that's going to be there 10, 20, 30 years, maybe 40 years. You want that company to be around when you're gone. So that's my advice. Again, I wish you the best of luck, and I hope I've been a help. And I hope to hear that you succeed. But anyway, everybody have a good night. I appreciate you watching my video, and hopefully we'll see you in the next video. Thank you. Bye. Hey, thanks for coming by. Glad you checked out the video. Hope you liked it. If you like it, please click on the like button. And if you're not subscribed to the channel, would like to invite you to subscribe to my channel. May God bless you, and I hope you have a good day. Bye. Bella's got to be right up under me, don't you, Bella? Oh, my word. Cloudy day, looks like it may rain. Clouds out over the valley. East Tennessee Valley. And Bella, she's just happy to be around.